Hey team, it is once again Sunday and time to dive into this week's ETF and max list review. So let's take a look at the ETFs. Leading groups produce leading stocks, and leading stocks produce leading groups. What are we looking for? We're looking for strength. Find strength in the ETFs, you can find strength in the stocks in that ETF or that group. So we start with, and this is sorted alphabetically, just to let you know, ARKA. How's about that? ARKK. It's sorted alphabetically. Okay, that's easy for me to say. So ARK Innovation, ARKK, weekly on the left, rallies up, reverses down, falls here a little bit. It has support on the ADMA, the yellow moving average. It needs to see a bounce off of that. Until you see the bounce, just sit tight and wait. Don't force. This is very important. Please don't force buys. Now here's ARK Next Generation Internet. Look how this closed. Friday was an ugly day. This closed near the highs of the day. It showed some strength there, folks. Okay, I'm not saying it's going to go, but let's be realistic. You're looking for strength? There's strength. Potential for a bounce next week. I'm not saying it's going to happen, but that's a good setup. That's a very reliable setup. I've looked through millions of charts through the years, through the decades, and we'll watch and see what happens with ARKW. What is it going to need? A good price advance with volume and a good market. Okay, I got to stress this. Please don't try to be the lone wolf out there, okay? Like, oh, this is it. I know what I'm doing. Let price and volume tell you what to do. You don't have to forecast. Not trying to preach, just trying to help. Biotech, stay away. There's nothing to do with the ETF. There's nothing to do with the biotech stocks. Energy's picking up, but it tailed off here a little bit too. Doesn't look too bad on the weekly or on the daily. It'd be nice if it based a little bit longer. And again, look what it did on Friday. It runs up and it closes in the bottom third of its range on a pickup in volume. It's met with some selling, okay? So we've got to be a little cautious with that group. There we go, and that ETF. Continue onwards. Internet gap down here on a slight pickup in volume, a little sloppy up here. What does that tell you? Be a little careful with internet stocks. And you know, team, think about this, and this is for everybody. There's power in knowing this stuff. It's like, God, I don't know what to look for. I don't know what to look at. Yeah, we do. That's why we do this in Mission Winners. Organization helps. IBD 50, they knocked that baby down pretty hard here on volume, okay? And you can see it on the weekly too. It actually gapped down on Friday. Be a little cautious with, and again, I'm not criticizing the IBD 50. Be a little cautious with quality growth stocks. There you go. Let's move on. Gold miners, stay away. That's it. By the way, I do this. I'm not trying to be funny, okay? I'm just being very direct. There's nothing here. You're not going to see this setup in any book saying, this is the setup that you look for. There's nothing there. There's higher probability setups. That's what we key on. Gold, same situation. Be careful with it. Stay away. Cybersecurity, drop down here. I mean, it's still above the 50-day, okay? And that's a plus, but there's not a lot of power here. The one thing it needs to do is potential setup. It takes out Friday's highs with volume and a good market. Those constraints have to be met. And if not, leave it alone. That's simple. Biotechnology, boy, they need some drugs, don't they? Look at that. That's stay away. Just stay away. Done. We buy strength. We don't buy weakness, okay? Online retail, no. Compare and contrast. This is getting spanked, right? Oh, this is down, but it's not too bad. I agree. Online retail, maybe that's something to look into. Gosh, is there any online retail stocks, big ones, like a MAXLIST stock? Let me think. What is that? Nile, that's it. No, Mississippi. No, that's not it. Yeah, there you go. Amazon. That's how we connect the dots. Continue onwards. Like software technology doesn't look too bad. So what does this say? Well, and it did fall in increasing volume, but it tells us something important. This industry sector isn't in that bad a shape. Look, it's only down to the rising ADMA. IGV, something to take a look into, or maybe some software stocks, leading software stocks. There we go. At Mission Winners, we sort, organize, we systematize. We got a limited amount of time and we want to do it wisely. Here we go. Medicine, a little sloppy there. Okay, just good bounce on Friday, but there's some travel range on these bars. You see the range on that bar? When you see wide range bars like this, okay, or this, it indicates high investor emotions. And this is a fact. And one of my degrees is in psychology, okay? High emotions and clear decision-making are mutually exclusive. There you go. There's a mouthful right there, folks. Here we go. Mid-cap's not too bad. Look at that. IJH support on the 21-day. Okay, not too bad. Something to look into. Now, what would you look for? Well, if it keeps falling, you don't do anything. But if it starts to bounce with good volume, maybe there's a candidate there. There you go. In a good market. ITA, aerospace defense, that got grounded. Stay away right now. Home construction, below the 50-day, leave it alone. Here's a very valuable lesson for everybody. That green line's the 50-day moving average. I used to say this at the IBD meetups for years. The air is better above a rising 50-day moving average line. Fact. Fact. Just get in line with it. It'll help you. Growth. S&P 500 growth doesn't look too bad. Also notice it's falling, but look, it's not heavy selling volume. So what does this tell us? Oh, maybe look into some S&P 500 growth stocks. There you go. That's systemization. And again, it helps us. It helps us a lot. So something to watch going forward. IVW. This could maybe bounce. You could maybe buy that ETF. Let's move on. IWM, it's coming down to the right here. The 21 EMA needs to bounce off of that. All right. And it needs to bounce with volume. But you look at the bigger picture, it's been trending up nicely. What's one slight negative? It is falling on steadily increasing volume. So what does that mean? Be careful with that. Move on. Real estate, stay away. Done. Transportations doesn't look too bad. Okay. By the way, have you noticed? We're seeing potential opportunity, not things to buy now, but maybe they'll show strength at the first of the week and it might lead to a buying opportunity. But I do stress, the market's in rough shape right here. Err to the side of caution. If you do buy, go smaller. This is an important lesson. And again, I ran a ton of money through the crash of 87, okay? And I learned then too. I don't argue with the markets. They'll tell us what to do. The M in mission winners, the first letter, M. What's it stand for? Markets. Markets. The second letter, industries. Third letter, sectors, right? Fourth letter, the stocks. There we go. Let's continue onwards here. Airlines doesn't look too bad either, does it? And again, I'm not like, oh, wow, look at all these, let's buy. No, I'm just saying there's things that don't look too bad. And you'll see why I'm stressing that. Banks don't look too bad. Insurance doesn't look too bad. You see a theme right there? What is that? KBE? Again, I'm not saying buy it, but I'm just saying the sector isn't in that bad a shape. And that's where the money will go. If it goes someplace, it's going to go to strength. Regional banking doesn't look too bad. Mid-cap, it's all right. Falling down to this is the 21-day exponential. Doesn't look too bad, okay? Continue on. Oil services doesn't look too bad. Now, that's the daily. How about the weekly, folks? That doesn't look so good. There you go. This is why, look at this one. There's the weekly, doesn't look too bad. You look at that, it's worse. That's why I love this template. Weekly on the left, daily on the right. It is a great setup. You get to see things big picture and up close and personal. Pharmaceuticals, they need drugs, stay away. QLD, falling here, and here, note this. This is the NASDAQ 100. It's falling, and it's falling on a pickup in volume, steadily increasing selling volume. Be careful with that. Be careful with that. Again, this is a great proxy for strength or weakness in the market. The NASDAQ 100. Growth stocks. Not a lot of power there, so it's just err to the side of caution. Here we go. Same thing's true with QQQ. Look at the selling volume on Friday. That's serious selling volume, folks. You got to be careful. On this bar, the stock did, I'll round up, 29 million shares. On this one, 51 million. Okay, so some selling. Just err to the side of caution. Retailing, falling here a little bit. Doesn't look too bad. There's some gaps ups, and then it gaps down. But it does tell us something. Retail's not in that bad a shape. That's good to know. How many of you knew that before I did this right here? There you go. Systemization. I love it. Cloud computing doesn't look too bad. All right. Yeah, we've been involved in some cloud computing stocks. And the ETF was telling us to. Possibly take out this high here. Could be a potential buy if the market's okay. SKYY. We're about done here. Silver, stay away. Oh, here we go. Dad humor. Silver is tarnished. There you go. You got to have, my kids would shake their heads. My grandkids would shake their heads. Here we go. Steel, a little sloppy here. Okay. I mean, it's got support, but there's some selling in here. I'd be cautious. Look at that weekly. Runs up, look, it gives it all back. Be careful with that. When you see big swings like this, that indicates high investor emotions. We don't want to be involved with things that are high emotion. All right. That includes people. Here we go. Semiconductor sloppy, stay away. Semiconductor direction, stay away. Spiders, support on the 21-day, but it fell on fairly heavy volume on Friday. Be careful with that. What do we need? We need to see this bounce off the 21 EMA and preferably take out the highs of this bar with volume. But there was some serious selling on that bar, folks. The heaviest selling volume going all the way back to August 1st. So just be a little cautious, or excuse me, October 1st. Sorry. SSO fell on increasing volume. Leveraged S&P 500. And you can see falling on steadily decreasing volume. Be cautious. Solar, stay away. I mean, folks, right there, that's why we do this. In 1 second, it tells you something a lot of people don't know. I'm staying away from solar stocks. Focus on strength. It'll help you. Small cap doesn't look too bad. TNA, as you can see, what's the sister stock to TNA? The non-leveraged one. IWM. You see how you connect the dots? And that helps us. What do we need to see with this? Lift up and lift up with volume. Until that, stay away. Oil services, there's no leadership there. Stay away from it. Okay, aerospace and defense doesn't look too bad. Okay. Rallied up, big reversal bar. There's a lesson for you. When you see a stock gap up, run up, and reverse down, be cautious with that. Okay. And it's still falling here. Potential bounce up here. Wide range bars. Just, yeah, but be careful. Okay. Overall, team, and this is for everybody, don't get overly aggressive here. All right. Biotechnology, look at that. Stay away from biotech. Home builders lagging, needs more power, be cautious with that. Materials lagging. How do you build houses? You need materials. Well, guess what? They're not buying those either. Communications doesn't look too bad, does it? XLC, something to maybe watch going forward. XLC. Or you can punch up and find out some of the leading stocks in the XLC ETF. That's good to know, isn't it? I like that. There's power. Energy doesn't look too bad. Look how that's hanging in there. There's no real clean entry on it, though, is there? Look what it did on Friday. It opened basically unchanged. It ran up and it closed right here in the bottom half of its range on a pickup in selling volume. They sold into that strength, folks. Be aware of that. Be cautious. XLF doesn't look too bad either. Okay. And by the way, when I'm doing this, don't think, oh, Pat's the eternal bull. No, I'm not. I'm the eternal realist. I just look at the chart. It will tell me what to do. This is a great quote from Dave Landry. It saved me through many different bad market situations. I'll believe in what I see and not in what I believe. Ponder that. I'll believe in what I see and not in what I believe. Let the chart, price and volume action, tell you what to do. XLI, not too bad, industrials. XLK was acting decent, but got hit fairly hard on Friday. Tells you to be cautious with technology. Consumer staples, there's nothing to do with it. Stay away. Utilities, there's some power there, but not a lot. Now, you see that pickup on Friday? Wonder why that would happen. Yeah, it's a defensive group. There we go. Money looking for a safe hair. Healthcare, taking it down. Stay away from healthcare. Done. Consumer discretionary, doesn't look too bad. XLY. What's it need to do? Bounce off the ADMA on XLY. So you can see there's opportunity there, potential opportunity. And that's good. We're always prepared. Metals and mining, it's hanging in okay. Oil and gas, tops up there, okay? You say, well, it looks pretty good on the daily, but look at the weekly. Look at the overhead supply. That's why this is a great template. Weekly on the left, daily on the right. Oh, and I need to share this with everybody. Protect your eyes. And now some of you say, I've heard that before. We have new people listening all the time. This is a great, there's a lot of work in this setup, okay? Black background, And then these vivid colors, it's easy on the eyes. I encourage you, please protect your eyes. Don't stare at charts with really light backgrounds. It's hard. It's like looking at a light bulb all day. It's not good for your eyes, okay? And yeah, I've done a lot of work on this stuff. This isn't off the top of my head, okay? XRT, retailing, doesn't look too bad, okay? Software still doesn't look very bad, does it? There you go, software, a leading technology group.
Hey everyone, Owen here. I wanted to step in with a quick overview of what's been happening in the markets recently. There's been a lot to digest over the past couple of weeks, and I want to break it all down in a way that gives us some clarity as we move forward. Let's dive in. The markets have shown some significant movement lately. After the election on November 5th, we saw a strong rally fueled by optimism. But here's the key takeaway: that entire move has now been retraced. This kind of reversal is worth noting, as it often signals a shift in sentiment. A big part of this retracement comes down to the Federal Reserve. Chairman Powell recently stated that the Fed isn't in a rush to lower interest rates. As you might expect, the market didn't react positively to that news, and it's something we need to keep our eyes on as it could set the tone moving forward. Now, looking at the S&P 500, we've seen a pullback that pushed prices below the 21-day exponential moving average. This technical development matters because it could indicate a change in market momentum. There's also a gap down to the 5,783 level, which might act as a magnet for prices in the near term. We'll want to watch closely to see if this gap gets filled in the coming week. The NASDAQ 100 is telling an even more interesting story. Not only has it retraced the gains from the post-election rally, but it's dipped further into its previous gap. This weakness in the NASDAQ, especially compared to the S&P 500, is something growth and tech-focused investors should pay attention to. Let's talk about bonds for a moment. The bond market has been in a clear downtrend with prices falling and yields rising. This suggests investors are demanding higher returns, which often ties back to inflation expectations or changes in monetary policy. While bonds might not be an immediate trade opportunity, their movement could affect equities and other markets, so we need to stay alert. In commodities, gold has been pulling back from its recent highs. We're seeing potential support around the 2,450 level in gold futures. And if prices stabilize here, it might present an opportunity down the road. For now, though, patience is key. Speaking of patience, let's touch on cryptocurrencies. Bitcoin recently broke above 75,000, but this breakout hasn't been as clean as we've seen in the past. The choppy price action tells us we should wait for clearer signals before making any moves. One more area worth mentioning is healthcare. The sector has been showing weakness lately, and since it makes up a significant portion of the S&P 500, continued underperformance could weigh on the broader market. We'll want to keep a close eye on this as the week progresses. To wrap things up, the market is giving us mixed signals right now. Key indices are retracing gains, some sectors are lagging, and other asset classes aren't showing clear direction yet. This isn't the time to rush in. Instead, it's a time for careful observation, thoughtful analysis, and patience. Remember, we don't need to act just because the market is open. Sometimes the best strategy is waiting for the right opportunities to present themselves. By focusing on leading groups and leading stocks with strong fundamentals and technicals, we'll be ready when the time is right. And with that, I'll turn it back over to Pat for his review of the Max List. Let's stay disciplined, keep learning, and be ready to capitalize on quality opportunities as they emerge.
Apple, until Apple starts to push above these highs with volume, you got to be cautious. That's simple. It needs to lift up through here, and it needs to do it with volume. And until that happens, stay away from Apple. That's simple. Also note on the weekly, fell on fairly heavy volume on the weekly here, fell on fairly heavy volume on the weekly here. Didn't close that bad, but there's some selling in here, and you can see it on the daily. Beautiful thing, emission winners, we don't forecast. We don't have to forecast. We let price and volume tell us what to do. And we know what to look for in the charts to make good investing decisions. And another very important foundation, we never argue with price. Makes it simpler for us. Continue onward. Amazon was doing great. Look at that. And then it hit, the elevator, and they dropped it down. We're selling in that. Be cautious with that. It fell on fairly heavy volume on Friday, folks, and it's a little loose now. Just be a little cautious with it, okay? Continue onward. Alibaba, stay away. I mean, look, you go, oh, that was trending up. That didn't look too bad on the way up. Well, that hasn't been doing much of anything for a while, and we've stayed away from it. There you go. BIDU, stay away from it. Done. Google started to form a little base here, and I would be full disclosure, we bought this right here, pushing through here. Look at the volume pickup. We bought it. Watch this. This will help you. Not just going sideways. I guess if it takes out that line with volume, the market was acting okay too, by the way, okay? We don't argue with the market. Oh, it lifted up on a pickup in volume. Did we buy a full position? No. Here's a very important lesson. I taught this at the Cancelim meetings, okay, the IBD meetings. Never buy a full position at one time. Never. Ease into the stocks. It will really help you, okay? So it does this. Oh, gives it right back. What do? We sell it in here for a very small loss. And now we've avoided this stuff. There you go. And nothing to do with it right now. Okay, leave it alone. Just want to give you the lesson. Goldman Sachs started to lift up here a little bit. Now it's pulled back. It's a little sloppy here. Just be a little cautious with it. Is there a clean base entry here? No, there's not. So we have to watch it. Let's continue onwards. MasterCard. Big tail bar here. High investor emotions. Runs up. Big drop here. Okay. High investor emotions. It's loose. Okay. Wide swinging charts are indicative of high investor emotions, lack of conviction. They don't like it too much. They'll take it right back down real fast because people are skittish with it. Not a lot of clean entry here there. Be careful. Continue onwards. Oh, I'll take this a step further though. You can see this. It has support on the ADMA. Could it bounce? If this market straightens up, could this bounce off the ADMA and get a lift? Yeah, sure. Maybe something to watch. Okay. But it would be an aggressive entry. The best entry, the safest entry is a clean and simple base breakout like that. That's it. I encourage you all. There's a million different things you can look at and you get caught in the weeds. Focus on simplicity. Be pragmatic, okay? If it's easy for me to see, if it's easy for you to see, that increases the odds that it's easy for other people to see. If it increases the odds that other people see it, does that increase the potential that if it's good, they'll buy it? Yes. Yes. Use that to your benefit. There you go. Meta, here's a good lesson for you. On the daily, oh, it's going up. Oh, they told me, oh, look, it's going up. Oh, it faded. Oh, look, it's going up. Oh, they faded. Oh, good. I'm not saying that to be funny. What does it tell us? There's sellers up here, okay? And it's not a conspiracy theory. It's just the chart's telling you. Every time it runs up there, it's met with selling, right? That's what you're seeing. Don't argue with it. Get in line with it. It'll really help you, okay? Continue onward. Nothing to do with it right now, okay? Microsoft's too sloppy. There's nothing good there. Leave it alone. Netflix. Gosh, look at this. It's kind of sloppy and choppy. Oh, gosh, Pat, that doesn't look too bad. There's kind of a simple base right there. Yeah, you're exactly right. Good job. I'm not saying that to patronize you. It's simple. It's easy to see. Watch this. Let's train our eyes. Oh, just going sideways here. Yeah, pretty clean tops. I guess if it takes that line out with volume, that could be a buy. Oh, gee whiz, look at the volume pickup on that bar. On this bar, the stock did volume of 2.2 million. On this bar, it did 3.7 million. There you go. And what did we do? Yeah, we bought some. There we go. And we got this. And did we sell some in a string? Yeah, we've sold some too. But it's a simple base. It's easy to see. Now, I need to pause here and share something. I'm not bragging with this. I'm trying to educate. That's my background, is education. My final on a university level was 24 pages tight. I had high expectations. Didn't get any death threats, though, so it was okay. Anyway, working here. Now, you see it dropped here on a pickup in volume. Just be a little careful. I wouldn't buy this right here. In fact, I'd be careful buying anything right now, okay? Let's continue onwards. NVIDIA lifted across this line, ran up. We own this from down on the weekly. We own this from down in here. Okay, you want to see a trend? That's a move right there. And then more here. Sold into strength and lock that down. Starts to pick up more. There's no clean entry on it right now, though. But I'm telling you, this stock has been a gift, okay? And by the way, I don't have pet stocks. I have the max list. They're not pet stocks. They're proven leaders. Have I ever taken any stocks off the max list? Yeah, when they're not leaders anymore, I don't watch them anymore. There you go. Continue onward. So there's NVIDIA. It needs to get across these tops here in a good market. It needs a good market. All of them do. Continue onward. NVDL has clean tops right there. Okay, nothing really due to that. All right. Block. Lifted off. This stock's been good to us through the years too. Lifted up through here. Ran up. Pulls back. A little loose here now. You can see the travel range in these bars. Be a little cautious with that at this point in time. Now, what's it doing? It pulled back on decreasing volume. It's got support here on the rising 8 EMA. That's the yellow moving average. The yellow line. Perhaps it will bounce off there. Now, given the market action, what do we do? This is an important lesson. Good investing is not one size fits all. Do more in clean and simple bases in a good market. Do less with clean and simple bases in a sloppier market. Or don't buy it all. There we go. I said this at the meetups for years. I'll say it again. Just because the market's for business doesn't mean we have to do business. Wait for your pitch. There's no penalty for waiting for your pitch. Tesla. We own Tesla. Look at this weekly right here. Isn't that beautiful? We bought this, got a good lift, and what did we do? We sold some into strength. We're in good shape. Now, here's a good lesson for you. It's falling on decreasing volume. The selling pressure is drying up. What do we want to see? You can't catch me on a lie, folks. You see, those were up. Back the video up, and you'll say, my God, he had those alerts up right when he came to the chart. Yeah, I'm already ready. If it starts to bounce off the ADMA in a good market with volume, we'll buy more. There's my price alert. You can say, wait, that price alert isn't at the highs of that bar. This is another very important lesson I'll share with you. I've been doing this a while. Don't set your price alerts at the pivot. Set them a little early. So if it hits that, you'll see it go off. You can study the chart on lesser time frames and see if volume's coming into it as it approaches the pivot. Good volume, good price action, good buy. No volume, poor price action, don't buy. Volume is the power that lifts the ship off the pad. That sounds corny, but it's a fact. Let's move on. What do you say? There's Tesla. There's Direxia and Tesla Bull. This is a new one I've added here. See how that price alert said? What are we going to do? We'll drop it down a little bit. Look what this does. There's a good lesson here. Folks, charts are a reflection of human emotion, psychology. Runs up on good volume, pulls back on less volume. Selling pressure's drying up. Support on the ADMA. Maybe it'll bounce off the ADMA in a good market. Something to look into. Let's continue onwards. We're about done, I do believe. That might be the last one. Oh, Visa. There we go. It's everywhere you want to be. Basing right here. Bounce off the ADMA. No, even in a crummy market, this lifted up on a slight pickup in volume. It's basing. Maybe it'll take off that line right there. Something to look into with Visa. But I do stress, this is for everybody. Don't force buys. Again, just because the market's open for business doesn't mean we have to do business, okay? Focus on simplicity.
All right, team, that's our weekly review. Hope it helps you get a clearer picture of where the market's headed and what stocks to keep an eye on. By the way, don't forget about our weekly top stocks to have on your watch list video coming out tomorrow at 1 p.m. Eastern. If you're curious about what we covered last week, you can find the link to that video in the top right corner. Remember, these watch list videos are just a small taste of what our VIP members get with the daily key list videos on missionwinners.com. So if you're serious about finding those super performance stocks, consider joining us. Now, I'm curious to hear from you. What are your thoughts on today's market review? Do you have any questions or concerns? Feel free to drop a comment below. I love hearing from you. Thanks for sticking around for the whole video. If you liked it, hit that like button and subscribe to our channel. And remember, stay sharp, keep learning, and keep finding those winners.